Little perspective on all of this. Stocks did lose some momentum at the end of this record week, but we got the gains that we've talked about. 10 points on the Dow, another all-time high today. The market panel today, Scott Martin from Kingsview Asset Management, also a Fox News contributor, and Jack Howes here from Barron's. Let me start with you, Scott. I think it's interesting that there used to be a time when we would have something like the horrible attack in France and the market would sell off and would be focused on that, but that doesn't happen anymore. And today we set yet another record high, albeit small gains. What do you make of that, first of all?
Well, we'll take it. I mean, I think your reason's exactly right. It's a shame, really, that these days a terrorist attack overnight really doesn't rattle these markets anymore because, frankly, it's become so commonplace. Yeah. But I will tell you, Connell, what I think is really supporting the equity side of these markets is the central banks around the world. I mean, look what happened recently. Like earlier this week, we had the Bank of Japan, Shinzo Abe, come out with, $1 trillion of yen of stimulus. You've got an ECB meeting next week on the 21st, which is going to be more stimulative. And then in 2 weeks, a Fed meeting, which has turned totally dovish of late. So to me, terrorist attacks, slow economic data really doesn't matter as long as the central banks are in play with all the money they're spreading around.
So they give us all that stimulus, Jack, that Scott is talking about, and we have these, as we said, eternally low interest rates that we're dealing with. So the idea that the only place you can find some return is in equities, and particularly U.S. equities, does that worry you? And should we be worried about that? That's been the fact for some time, I guess.
You should definitely be worried about it. You say they're giving you stimulus. What are they stimulating you to do apart from pouring more money into stocks?
Right.
I mean, Americans have a lot of debt. You know what they have more of than debt? They have more savings and bonds together, which means...
So you're a bubble guy. You think there's a bubble.
When we have rates this low, you're not stimulating the economy. You're punishing people who have money saved up. And the net effect of that is larger than anybody out there who's looking to borrow. So I think this has become actually a drain on the economy at this point, but it certainly is chasing people into risky assets.
Meanwhile, travel and airline stocks falling today after the horrible attack in the French Riviera. It marks the third major terrorist attack in France, which earns more tourist dollars than any other European country in the last 18 months. Scott, I mean, you hate to reduce this to dollars and cents, but traders are, as they watch it today and think about the fact that this is an economy that's driven by tourism, and you don't know how many people are going to be flying there. Stocks, airline stocks really paying the price.
Yeah, we saw a similar thing, Melissa, and we were on together a couple weeks back after the Brexit vote. A lot of these travel stocks, whether it's Priceline or really, frankly, U.S.-based domestic airlines like Delta or JetBlue, which we like right here because they've just fallen so much, not alone in this last 6 months, but also in the last some weeks. So to me, you know, the travel area is one where, unfortunately, these terrible, disgusting attacks or these events around the world are actually possibly opportunities if you've missed these stocks over the years because they take a hit in sympathy with bad worldwide events.
Yeah. Jack, what do you think about that? Is it an opportunity or is this, you know, a trend?
It's an opportunity, but it's been an opportunity for a long time. This is an industry where investors typically panic at the first sign of profits because they worry that the airlines are going to blow out capacity. Now we're down to 4 big carriers in the U.S. I think they're much more restrained. I think profits are here to stay for years and years, but it might take the next recession before investors come to admit that these companies are going to remain profitable for a while.
Yeah, Scott, you agree with that?
Not so much. I mean, I think if you're looking at some of these stocks, they're already down. I mean, if you look at JetBlue, if you look at Delta, if you look at some of the airlines, they've already been blasted in the last 6 to 8 months. So to me, that's an opportunity to maybe pick up, you know, a few percent here and there because I think they've got to retrace some of that move.
Now, another big story today, the FTC making this announcement that it's reached a settlement with Herbalife and forces the company to pay $200 million to consumers who were harmed by their practices. We know about the activist investor Bill Ackman and all of this, officially lost $1 billion bet that Herbalife would be proven to be pretty much a pyramid scheme. You know, Charlie Gasparito's been all over this. I know he was talking about it there not too long ago on the network. Scott, Herbalife, nice day today, whatever short covering, whatever's going on. What do you make of this?
Not a ton. I mean, I'd probably rather go to the casino than try to figure out what's going on with Herbalife. I mean, I'll tell you, it's a fun one to watch because any given week there's some crazy news out about it that makes it go up 4 or 5% or down the other direction. If you're playing this at home, you got to be careful and know what kind of water you're wading into, which is very uncertain to me and full of a lot of rumor and not a lot of truth.
Right. Well, that's the thing with Ackman kind of playing around with all this, as Charlie has reported. Jack, what do you make of this whole saga?
There's only one thing missing from this as an investment story: proof that people buy the products because they like to consume them and then buy more of them. We know that people like to, pitch the products to people they know in order to try to make money. Now the company is going to have to downplay the sort of, financial return promises it's make. It's actually going to have to move merchandise to people who want to consume it. I'm not sure there's a clear. I don't see, a lot of evidence that people love this stuff and want to drink more shakes.
Demand for that. Jack and Scott, appreciate it as always. Good stuff to start us off. Thanks a lot.